The latest inflation report gives the Federal Reserve the green light to cut interest rates in the month of September. And based upon the movements in equities, currencies, treasuries, as well as commodities, the market is convinced that September is when the Federal Reserve will deliver its very first interest rate cut of 2025. Stock futures were trading kind of flat ahead of the CPI report, soared on the back of it. Treasury yields turned negative. Gold prices rebounded, and the US dollar sold off across the board. The data wasn't terrible. Now, even though headline inflation growth did slow, core CPI year over year increased, which indicates that there's still some inflation somewhere in the US economy that is accelerating, not decelerating. However, none of that really mattered because, as I've said in the past, the Federal Reserve is not going to pass on cutting interest rates unless the data is terrible. And, inflation on overall basis increased, and that was not the case. We only saw inflation increase on a core basis. So I think we've got the green light. The market has fully discounted 125 basis point rate cut in September and almost 2 rate cuts this year. And I think that's what we'll end up seeing. President Trump is going to get what he wishes for. And this is going to keep pressure on the dollar this week. We have US retail sales at the end of the week, but inflation and jobs is the most important thing for the Federal Reserve. So I think, we kind of have the free reign now for a more significant pullback in the dollar as the market positions for the Fed to get more active towards the end of the year.